So over the past year, we've seen a huge awakening in the 60-40 investment portfolio allocation as big boys like BlackRock and UBS continue to say, hang on, this isn't working anymore. Putting your money into stocks and bonds might not actually be the way going forwards. And even now, Goldman Sachs is making a strategic case that gold and oil have the long run portfolio allocation and should be in people's pockets. And gold isn't just safe, as we're seeing, it's smarter. The analysis is not only is it improving the returns of portfolios, but it's also improving the safety as it's reducing volatility while increasing growth and returns. And truly, I believe the 60-40 portfolio, which everyone's been talking about, which is 60% stocks, which gives you that volatility and growth, and 40% bonds, which gives you that so-called safety, even though the US Treasuries continue to be dumped by the day, is continuing to show signs that it's frail and no longer the way to go. And you understand this because currencies and economies work in cycles. And that's what I want to show you in this video, and why I believe the 60-40 portfolio is actually metals and crypto. So let's break down the historical data. Let's see how the numbers have been working in the past few years. In the last 50 years, let's see how it's been going. In the past 50 years, which is from 1970 to around 2025, we've seen that gold has been the winner comfortably. It's outpaced the S&P 500 comfortably during this period of time, and it's well up, while silver continues to lag behind and looks like the undervalued asset. Now, that doesn't mean that stocks and bonds aren't as good as gold, and it doesn't mean gold's better than the S&P 500 and the Dow Jones. But you need to understand that actually the economy works in cycles. I like to show this. It's the correlation between the S&P 500 and gold. And it basically shows you how an economy works and how an economy cycles. Generally, what we see is when an economy is struggling and we're in these gray recession periods, we see that there's an increase, then it goes downwards as gold kind of continues to outperform the S&P 500, and there's this negative correlation before the economy, I guess, continues to build up again and stocks outperform gold and silver. And this works in cycles over and over again as we see winners in gold and silver over periods of time and winners in stocks. And you need to be able to pick these points in time in when it's working well. For example, if we look at, let's say, the 1980s to 2000s, just before that dot-com bubble period, we saw that clearly the S&P 500 and the Dow Jones was dismantling gold and silver. At that point, gold and silver actually being considered an ancient relic of the past. And that was that cycle where the stock market was booming, and putting your money into that area was correct. What's funny is just before that cycle period, we saw that between the 1970s to 1980s, as shown here, gold and silver outpaced the S&P 500 and Dow. And that was Dow Jones ratio. And that's when we saw that they were the assets to go into. And the point that I'm making here is that economies work in cycles, and there's times to be in stocks, and definitely a period of time where I'll be involved in that. And there's a time to be in gold and silver. And right now, personally, I believe now is the time to adjust the allocation from that bullshit 60-40 into real hard assets. I mean, if we look in closer detail at the last year and where we're heading, it's clear that there's a massive outpacing happening, and we're going back into that 1970, 1980 period as gold and silver continue to massively outprove and go past the S&P 500 Dow Jones ratio. We're seeing returns which are much higher and much more competitive compared to the S&P 500. And the Dow Jones, which, let's be honest, is barely going at inflation levels. Although you hear the CPI is probably around 3-4%. Realistically, it's more at 15% if you know your stuff. So the point that I'm making in this video is you need to understand that the economy works in cycles. And this cycle in the next 5-10 years is gold and silver. Because that's what happens when a currency fails. When you continue to print over and over again and print $1 trillion every 90 days. That's why gold and silver will continue to move. And I believe that the new 60-40 should actually be 60% in bullion, gold and silver, as they protect you from any kind of inflation, gold being extremely safe from any kind of volatility. And then in an economic downturn, it can actually goes up instead of down, unlike most of the stock market. And then 40% can go into cryptocurrencies. And in my opinion, mostly that should be going into Bitcoin. I believe in the next 10 years, that should be your move. And then once the stock market goes down and it has its downturn and that cycle is complete, that's when you can remove your money back into the stock market. But you got to understand we're heading into a changing period of time, and this is an opportunity. And I just wanted to show that in this short video. If you enjoyed this video, please like and subscribe. If you want to see more graphs, more information, more data like this where I just put my insights out, just subscribe and you'll see more information like this.